Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Vivek Iyer. Vivek, very good afternoon to you. The markets have made a roaring comeback in the last few minutes of trade. The Nifty as of now has recovered almost 400 points from the day's lowest point.
That's right. Good afternoon. Just around 40 points away from 25,000 as far as the Nifty is concerned. Broader end of the market is very strong. Last hour has seen a significant surge. We have quite a lot lined up on the show, quite a few managements as well. Let's start off with the top headlines. Markets at the day's highest points as Nifty and Sensex recover from morning lows. Mid-caps hold steady.
Defense stocks continue to surge post-Operation Sindoor. Nifty Defense Index is up almost 15.5% in the last 12 sessions. Stocks like Cochin Shipyard, Garden Reach Shipbuilders and Hindustan Aeronautics surge between 2 to 5%.
Went tags nearly 15% in trade after its parent company announces an offer for sale to divest up to 37.5% in the company with a floor price of 6,500 rupees a share.
Tilaknagar Industries zooms over 10% following its Q4 results. The company reports good revenue growth led by 20% volume growth. The management tells CNBC-TV18 that the company will see high teens revenue growth in FY26.
E-Clerks rallies nearly 9% on the back of a strong fourth quarter that beat analyst estimates. Rupee revenue rises 5.18% on a sequential basis. Contract value of new deals is at an all-time high of $51.2 million.
24,960, that is where the Nifty is at. The markets have made a roaring comeback. The benchmark indices so far were underperforming the gains on the broader indices, but it is in fact the benchmark indices which are now gaining and leading the charge in today's trading session. Most of the sectoral indices have now turned into the positive. The gains are being led by the Nifty Media. Z Entertainment is up almost 3%. Saregama, Hathway, all of these counters are seeing good gains. Auto as well as realty stocks are also surging higher in trade today. But there's a lot of vibrant action happening in the mid-cap space, and in a special segment, Mid-Cap Movers, we now have Hormaz to take us through the mid-caps that are moving around in trade. Good afternoon, Hormaz.
Good afternoon, Vamakshi, and a slew of results that have been trickling in over the last 15 to 20 minutes. But there are a lot of other movers as well within the broader markets, and the topsy-turvy move that we have seen on the benchmark indices. Look at the moves here. Triveni Engineering at one point was up almost 7 to 8%, has given up most of its gains now. Ramkrishna Forgings, though, is at the highest point of the day, as is Netweb Technologies. KEC International, it won an order yesterday, is reacting to that today, 7.5% higher in today's trading session. This spoke of earnings, the numbers of CESC flashing at the bottom of your screen, but there are a lot of other result reactions as well. Look at Kirloskar Oil, 14% higher now. Muthoot Finance, on the other hand, is at the day's low, as is Hitachi Energy and as is Piramal Pharma, losses of anywhere between 4.5% to 7.5% now for Muthoot Finance. Some of the other stocks that have been doing well, and of course it is the defense names. Look at Cochin Shipyard reporting results today, 6% higher, another 5% circuit for Zen Technologies. Expectations are high for Masgao Dock as well, up 3% in today's session as well. Stocks that are doing well on the volumes front. Look at E-Clerks, that's another result reaction. At one point was up almost in double digits, still holding on to gains of around 9%. Linde India and Sri Renuka Sugars have given up some of the gains, still holding on very strong volumes. And lastly, some of the other newsmakers in today's session. Persistent Systems, of course, on concerns of over a large client in the US facing issues. Kalpataru on the order win. Brigade Enterprises and earnings reaction, and of course some property-related developments as well. Some of the stocks having mixed reactions today with regards to news flow. Back to you guys.
Thank you so much, Hormaz, for joining us and taking us through the list of stocks that are making all the moves as far as the broader end of the markets are concerned. Well, we'll quickly look at the results of CESC, as you can see flashing on the bottom of your screen. It's been a steady quarter. PAT appears to be impacted by a couple of one-off items. We'll delve into that. But we'll now slip into a short break. On the other side, Pavitra Shankar, Managing Director of Brigade Enterprises, joins us to discuss their Q4 performance. Welcome back to Midcap Radar. Well, Brigade Enterprises recently reported their Q4 numbers. The company saw their pre-sales and collections surge on a year-on-year basis. To discuss this and more, Pavitra Shankar, Managing Director, Brigade Enterprises, joins us now. Thank you so much, Pavitra, for joining us. It's a pleasure to have you on the show. First up, As far as FY25 was concerned, we understand that it was marked to a certain extent on account of various delays when it came to regulatory approvals coming in for project developments. First up, have most of these issues been resolved? How did it impact project launches and development in FY25? And secondly, please update us on the timeline, likely size of the upcoming hospitality IPO as well.
Yes, so thank you for having me. I actually think we had a pretty good year. Despite the delays and approvals that we did see impacting our portfolio, especially in Bangalore. That said, we were still able to pull off very good numbers. Basically, the approvals delayed some of our launches from happening within the financial year. Some got pushed beyond the financial year of FY25, but we will see those start coming into our pipeline in the upcoming 4 quarters. So last year we had actually intended to launch about 12 to 13 million square feet of residential space. We were still able to launch almost 10 million square feet of residential. And in that, we were able to sell almost half of whatever we did launch that reflected in our last year's pre-sales as well. So overall, we were still able to do about 7 million square feet of sales, which value was around 7,800 crores of pre-sales value. So yes, there was some delay in the launches. There is still some amount of delay when it comes to approvals, but we are working through them and able to bring our projects to the market for launch. And when that happens, we're still seeing very good demand from customers across the board, whether it is mid-segment, upper mid-segment, and since we have also launched multiple premium and super luxury projects in our portfolio, we're seeing very good demand for that as well.
Sure. Pavitra, hi, this is Vamakshi joining in. If I understand this correct, like your pre-sales stood at 7,850 odd crores. This has far exceeded the guidance that you had started off with earlier. So what is the outlook that you're looking at for FY26 on the pre-sales as well as the launches?
So yes, last year the number was 31% increase on the previous financial year. Typically, we don't give guidance, but we generally say we like to show at least a 15% growth year over year. And I think this is something that is a good number, especially as the base keeps increasing, and we'll aim to do something similar year over year. Of course, as we go into different markets, say Hyderabad and Chennai, where a substantial amount of our upcoming launches and pipeline will be there in those 2 markets, in addition to Bangalore and Mysore, we will see that number keep changing depending on the mix of the kind of product that we have as well. So it's not just in terms of area, but also in terms of value that we're looking to see the numbers grow.
Pavitra, just a follow-up, what is the update as far as the hospitality ventures IPO is concerned? We understand you have the approval on board now. Can we expect it to launch in FY26? And how does it alter your debt picture?
So I will have to actually maintain that since we received the approval for the DRHP back in October, we're still under publicity restrictions, and we're not able to speak too much about it.
And, just coming back to the business then, what is the expectation for further land acquisitions, especially in the southern markets? How much land is there available, for this? And what would be your, strategy, especially in the southern markets beyond Bangalore?
Bangalore has been our home turf, but in the last couple of years, we have launched projects both in Chennai and Hyderabad, which is testament to the increasing levels of business development we've been doing in both those markets. As recently as yesterday, we closed a transaction in Chennai for a very prime parcel, about almost 5.5 acres in a very good locality in Chennai, and that should give us around 2,000 crores of gross development value for a residential project. So I'm happy to say that in Chennai, our position is very firm as one of the leading developers in the residential space. We also have commercial and hospitality spaces in Chennai. Hyderabad, we launched a project called Brigade Gateway in Neopolis. It is a mixed-use project, and we have already sold 1 million square feet of that. It was extremely successful in terms of the way it was absorbed by the market there, and continue to have another million and a half square feet for launch in Chennai in the coming in Hyderabad in the coming pipeline. So going forward, we hope to see greater contribution from both Chennai and Hyderabad, maybe 20 to 30%, depending on how much we can launch and sell in the next 4 quarters to be coming from those 2 markets. Of course, we still expect to have a strong showing from Bangalore. We also have a few smaller projects coming up in Mysore. But again, our focus is on southern cities, and we aim to continue to do that.
Pavitra, you just alluded to Chennai plans. Yesterday, you went ahead and signed that project. Could you reiterate the GDV or the potential over there? And also, have you bought this particular property from the Rane Group? Because we understand that is where they had significant land as well.
No, this is not from the Rane Group. It is 0.8 million square feet is what we have planned to build there. And I think I got the number wrong. It's actually 1,600 crores in terms of GDV. Right. I mentioned 2,000, but it's 1,600 crores.
Understood that. So going into FY26, you have a pretty strong launch pipeline. Could you break up, the launch pipeline for us for Q1 and Q2? What is it that the street can anticipate? And also give us a sense of how demand trends are panning out. We did see a lot of registration-related delays, but has demand remained steady, especially as far as, demand from IT is concerned?
Yeah, so for the next 4 quarters, we track it on a rolling 4 quarters basis. Our total pipeline for launch is around 16 million square feet. Around 12 to 13 of that would come from the residential sector, and the rest from our lease portfolio in that order. In terms of quarterly breakup, it's a little difficult to say. While we are planning internally, it's so heavily dependent on approvals, which is why we look out on a 4-quarter basis. But going forward, I think the next few launches will come from Chennai and Bangalore, and towards the end of maybe the first half of the year, probably also Hyderabad. So it's and Mysore as well. So actually, we're fortunate. We're in a position where all 4 of the cities where we have a very strong presence will continue to see these launches. In terms of demand, we've seen an amazing run-up in terms of demand and pricing, especially in Bangalore and Hyderabad, and supported by Chennai over the last 2 to 3 years. That's also been the reason why we've pushed into more of premium housing in certain projects in these markets, while overall we look at mid-segment to upper mid-segment in residential as a whole. That said, the demand for premium housing is very good. But I don't see pricing continuing to increase at the rates that we've seen over the last couple of years. Also, in our portfolio, especially in what we would call the mid-segment, where the ticket size has increased dramatically from what used to be 1.5 crores was seen as a very good mid-segment ticket size. We've seen that number cross 2 crores. The time taken by customers to make those kind of decisions is definitely taking a little bit longer. But that does not concern us, or that does not sort of give us cause for concern, because we still feel that they are coming to the table. They're very strong, pickup in terms of leads. There are a lot of walk-ins coming into the site across the board. So we're still seeing people interested. They do take a little longer to convert because naturally the ticket size is more than what we've seen. In terms of your question on IT, despite whatever people are talking about, whether it is in terms of the impact of AI or in terms of the hiring of IT services companies, we've seen still our typical customer is from a tech background. I would say it's shifting more towards people who work in GCCs. There's a lot of embedded technology and digital transformation work that's happening across almost every company. And we're seeing a lot of those kind of profiles. So maybe 10 years ago, a lot of the demand was your traditional IT services firms, but now we're seeing that shift to, homegrown companies, GCCs, and so on. So it also means that the customer is a little more, able to afford some more highly priced product as well. So these are the trends that we see.
Right. Thank you so much for that, Pavitra. Thank you so much for joining in with us after your Q4 numbers. Wish you luck for the quarters ahead. That was the management of Brigade Enterprises. They're saying they expect 15% year-on-year growth in their pre-sales, and they still see very strong demand across the mid, upper, and premium, as well as the super luxury segment. But just before we take a short break, pull up the chart for Prism Johnson. The company just reported its numbers as we were in conversation with Brigade Enterprises. When we look at the numbers, the EBITDA margin has surged to 8.9%. Right after the numbers were reported, the stock has seen a very sharp surge. But time for a short break. Management of Transport Corporation of India joins us on the other side to discuss their numbers as well.
Well, when we started the show, first up, welcome back to Midcap Radar. When we started the show, we were around 50 points of drift as far as Mount 25,000 was concerned. In just the last 19 minutes of the session, we've seen almost a 100-point rally, and the markets have now well above the 25,000 mark. What has led the markets higher? Well, it's largely led by the heavyweights. Have a look at a name like Reliance Industries. That particular stock now at the day's highest points. Some of the banking heavyweights, names like HDFC Bank, ICICI Bank. Have a look at Larsen and Toubro. That particular stock surging to the day's highest point. And it's actually a broad-based rally. Have a look at the Nifty Bank Index as well, now up about 1%. The mid-cap and small-cap index, they were actually outperforming, but given the sharp surge that we've seen in the Nifty as well as the Bank Nifty, both of them still in the green, still around 0.5% higher, but doing quite well. It's an absolute rocket as far as the Nifty is concerned, especially the last half hour or the last 20 minutes of the session especially.
Well, absolutely, Vivek. In fact, we've managed to hit the 25,000 mark, and this is important. It for the first time after October 17, 2024. That is why it's so important. But from one management to another, Transport Corporation of India is on our radar now. For Q4, the company has seen margin expansion driven largely by their Seaways business. But there is some slowdown in the revenue growth. To talk more on the Q4 performance, we now have Vineet Agarwal, who's the MD of Transport Corporation of India, joining us now. Good afternoon to you, Vineet. Let me first start off by asking you about your revenue as well as profit growth guidance. Now, you say that you're expecting 10 to 12% revenue and profit growth in FY26. My question to you is, why have you lowered the upper end of the guidance? Because typically, you tend to give a revenue growth guidance of anywhere between 10 to 15%.
Yes, well, thank you for having me. The first quarter of the year is usually a little bit more suppressed compared to the full year, compared to quarter four. And the guidance is slightly softer because, the conflict that has happened recently, India-Pakistan, has actually disrupted supply chains to some extent. We've seen that some of the factories and warehouses were shut in the northern part of the country. Some labor shifted also to the eastern part. Supply chains have been also hampered. So like we run warehouses for a few companies and we had to invoke the business continuity processes there, as well as dealers are not taking enough inventory for cars, etc. Business delegations have also slowed down and there is a certain amount of risk factor that has come in. I think this will impact business for the next few weeks, months. And this means that the quarter might get a little softer going forward. However, the festival season looks attractive and I think perhaps how things progress with the first 6 months, we can probably look at a revision. But a 10 to 12% seems to be more on the ideal number this time.
Okay, so we need 10 to 12% on a conservative side, given the kind of geopolitical tensions that we're seeing. Well, that is as far as the top line is concerned. What are the sustainable EBITDA margins? We're talking about the consolidated EBITDA margins. You've earlier given a target to be in the range of 10 to 11%. You've ended FY25 closer a little lower than the 10.5% mark. FY26, first couple of quarters, post-disruption, where do you expect that to be? And H2, do you see a recovery?
Yes, I think the margin side things are a lot more visible, I guess, to some extent, because the shipping business has done well. Our other logistics businesses, the supply chain business is doing well. Our joint ventures are doing well. So in that context, the margin structure remains stable. There could be some pressure, as always, with the economic situation and some amount of economies of scale not coming in because of the increase in revenues. But notwithstanding, we think this guidance of 10 to 12% on the bottom line also remains. Um, See, I think what has happened is that several factors that used to be earlier impact in terms of our profitability are reducing quite a lot. For example, fuel prices. Now, fuel prices have been benign for the last several months and now, in fact, years. So that has gone away to a great extent. On the road side, toll taxes have gone up quite a lot in the last 2 years. So that impacts a certain amount of cost structures. But general inflation, general cost of people, and other such factors definitely keep up the cost pressures.
Sure. And what is your outlook on the Seaway freight rates? And what would be the impact of higher freight rates on your business?
Currently, the freight rates are also quite high. We are not really impacted by international freight rates. So we are a domestic company. We operate on the west coast and the east coast of India, really connecting nation through multimodal network. What happens is that when international freight rates are high, as it has been in the last few months, some capacity shifts from the domestic sector to the international sector, which creates a supply constraint locally, and hence prices go up. Going forward, I do not expect that if the geopolitical tensions reduce, then freight rates will also come down globally, and hence over here in domestic sector also freight rates might stabilize a little bit more. So our estimation for the full year is that the freight rate should be almost stable on the Seaways side.
Understood that. But so Seaways, you're expecting it to be stable, so we can expect stable margins as well over there, we understand. Also talking about the cold chain segment, how did that particular business perform as per your own internal estimates for FY25? What is the target over there for FY26?
The cold chain business is actually very attractive right now. We've grown moderately, about 50 to 20% in the last fiscal, but we've added a lot of capacity when it comes to new trucks into cold storage facilities. We're building a state-of-the-art facility in NCR. We've acquired a lot of contracts, especially not just in the QSR side, in the quick commerce side, in the pharmaceutical side, but we're also looking at other fast-growing sectors like semiconductors, etc., where the demand for cold movement will be very, very high. So the next few years, we should be looking at a 15 to 20% CAGR in terms of growth and some amount of investment also per year. It is a joint venture that we have with a Japanese company, Mitsui, where they own 20%. So the capacity and the ability to grow this company is extremely high.
Well, Vineet, one other hot sector as of now is quick commerce. It has been quite good for you, as you've said in the past. Fulfillment is also growing quite well. So, how much of Q-commerce now accounts for in your overall sales? And one more question is actually on the freight division. What is your FTL versus LTL mix and the outlook on volumes and realization? So, QCOM and freight division, can you please elaborate?
Quick commerce is not really a substantial part of the overall business. It's a business that's growing, but we do not expect it to become really, really very large as a business specifically, because we operate on a sliver of activity which is essentially just fulfillment. So we bring in the merchandise, we do inventory management, and then we supply to the dark stores. So it's a fast-growing business, but not really very large in terms of size. In terms of freight business, our LTL business is about 36% out of the overall freight business. And the outlook for this is that we want to increase this to 40% in the next year or two. And the idea is that LTL business has a lot more margin compared to the FTL business, and hence our focus is going to be there.
Thank you so much, Vineet, for joining us, giving us a sense of what exactly transpired as far as Q4 as well as FY25 is concerned and the way ahead for FY26. Well, when we are looking at the markets, the strength over there continues to remain quite astounding. The Nifty now firmly perched above the 25,050 mark. The Nifty IT index led by TCS, led by HCL Tech, all of these names now near the day's highest points. The Pharma Pack 2 is rallying. It's an all-round rally that we are seeing. So we are leaving the team of RMF Corner in very strong hands. Thank you so much for watching Midcap Radar.